Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, October 12th, 2022, starting with our economic spotlight. So we got some monthly credit data out of China, which were marginally disconfirming of our structural liquidity trap thesis for those of you who've been following along with our research. So we had total social financing growth accelerated to a 3-month high at 3.53 trillion month over month. That was aided by a 3-month high increase in total in new Chinese yuan loans at plus 2.47 trillion CNY month over month. Now, this increase was despite the PBOC tightening financial conditions at the margins, which we saw through the tightening in the 3-month Shibor rate. So we saw the tightening in the 3-month rate, et cetera, and all the different tools the PBOC used to enact that financial tightening contributed to a 70 basis point deceleration in M0 base money to a 4-month low growth rate of 13.6% year over year. Despite all of that, we saw total loans of financial institutions accelerate 30 basis points to a 3-month high of 11.2%. Recall that total loans of financial institutions are, in fact, the most important metric to track when you're talking about China's credit cycle, given that 83% of private non-financial sector credit in China, on the mainland China, is on bank balance sheets. So it's capturing pretty much the bulk of all incremental credit issuance. It's not clear yet, especially ahead of the Party Congress, which begins on the 16th, so next Sunday. It's not clear yet if this sort of inflection in the credit data represents sort of an increased willingness amongst Chinese authorities to prioritize growth over political stability, considering the fact that a lot of people have speculated that zero COVID is merely a guise to sort of prevent political instability into and through the Party Congress. It's our view that we got to, continue to follow the guidance there. Moreover, not only just follow the guidance, but also follow sort of the leading indicators for the Chinese credit cycle, which itself is a leading indicator for the Chinese credit impulse, which itself is the leading indicator for Chinese growth. So we got our eyes on this closely. This is a very important month for China. The one thing I call out as it relates to financial market risk broadly outside of China is that as investors need to be most concerned about any positive developments on the zero COVID front. Now, obviously, the first thought you would say China gets rid of zero COVID or amends it in a very positive manner. That's probably going to be good for global financial markets. And it might be instantaneously, but it's not clear that that's going to be good for the medium term, given what a non-zero COVID or less zero COVID Chinese economy would do to global energy prices once we get past the strategic petroleum release, that strategic petroleum reserve release that we're seeing. Obviously, that's likely to conclude next month. So to me, I think the one big surprise for Q4 is that we could see a resumption in headline inflation, given the dynamics associated with crude oil, given, with OPEC supply cuts, et cetera, zero COVID potentially being an upside surprise, and then obviously the end of SPR release. Shifting to my loan bow dashboard here, just going down global macro. So US dollar, that is still bullish in the middle of the range there. Gold, that is bearish, kind of in the middle of the range there as well. 10-year treasury yield, that's bullish, getting towards the upper boundary of the probable range. Let's click into that, see how much we got here. So we're at 3.93%. At 4.07% would be the upper boundary of the range there. Bearish S&P 500 in the middle of the range. VIX getting overbought. So VIX is bullish, but you're starting to get overbought signal in the VIX there. So I got about upside to 35.04. We're at 33.63 now in terms of the VIX there. So maybe you get a little spook there in terms of tomorrow's CPI data. We talked about that in the leadoff morning note today as well. Spoiler alert, there will be no spoils. Definitely subscribe and check that out if you want to see that. NASDAQ 100, that is bearish, getting towards the lower boundary of the range there. Russell 2000 outperforming of late. It's in the middle of this range there, so be aware of that. You continue to see this move towards pro-cyclicality in terms of our dispersion model. We've consistently called that out throughout the summer as an indicator that the bond market, the duration risk that we see in the bond market, and the volatility we're seeing across global fixed income is something that's likely to continue, or at least at the bare minimum is being confirmed by equity market investors. Bitcoin, Ethereum, getting close. They're both still bearish, both getting close to the lower boundary of their respective probable ranges here. Bitcoin got about downside to 18,600. Ethereum, it's got downside to around 1271. So these things are pretty close to being oversold. So if you get an upside surprise in CPI, downside surprise in CPI tomorrow, you're likely to see from an elevated VIX low levels of crypto, low levels of stocks, you could have, sort of a pain trade to the upside. But again, that may not be the case. So definitely go check out the note in terms of some of what we're looking at from a leading indicator perspective on the print. Shanghai Composite, that's bearish, not quite oversold here. And then neutral crude oil, that's in the middle of the range. Neutral ag, that's in the middle of the range. And then neutral bearish industrial metal, that's in the middle of the range. And then shifting gears, looking at my own personal indicator list. So this is about 300 global macro ETFs represented in this sample here, all each representing an individual factor exposure across global macro. They're all sorted based on the upside, downside, and the probable range. As you can see here, top this list of 300 ETFs. There's nothing signaling overbought this morning. So we're going to scroll down and see what's signaling oversold. And when I got to the bottom of this list, the one thing I would call out, at least heading into this party Congress, is that there's a lot of China and China-related ETF exposures, individual factor exposures that are oversold or near oversold. They're all bearish. And so we wouldn't necessarily say you got to go out and buy these things, but we definitely would call out the fact that they're oversold. So a lot of investors, particularly in the hedge fund community, have used China as a source of alpha on the short side throughout this year. So I would be careful pressing shorts into this party Congress, given the nature of the open-ended risk, the bidirectional risk that you're seeing in there. So, kind of looking at China internet, that's nearly oversold here. You got Taiwan's nearly oversold. I mean, it's a who's who of Chinese equity exposures. Hong Kong's oversold as well. China info tech, healthcare, consumer, Chinese financials, China technology. So be aware. Definitely don't be shorting China into this party Congress. In fact, just based on this current signaling setup, because we always talk about a 42 macro from a risk management standpoint, a lot of times the catalyst is not the issue. It's the issue. It's the setup into the catalyst. It's the crowding and the options market and the derivatives market positioning into the catalyst. And these are all things that we talk about on a daily basis in our lead off morning notes. So with that, just by the way, definitely go check out Longbow. I don't have to be the only one putting together a list. If you have your own watch list, if your own equity tickers, your own cryptocurrency tickers, your own ETF tickers, create a Longbow account. It's quite cheap to use this tool. It's very powerful. Backed by some very, very smart people, very good, thoughtful people in the hedge fund space that I'm personally friends with. So I'm quite proud to present this tool because I think it's quite revolutionary and really additive to my own personal process. So I definitely think you should definitely check it out. So with that, Darius Dale presenting our macro minute for Wednesday, October 12th, 2022. And by the way, we got my fan, Ahan Menon, founder of Prometheus Macro, on Macro Bundle Live today, starting at 11 o'clock a.m. Eastern. So subscribe or upgrade to Macro Bundle if you want to check that out. Cheers.